All right, ladies and gentlemen, welcome back. It is Monday, November 27th. We got another chart talk coming at you guys. We're dealing with a pretty feisty market on our hands. The second breakout market we've actually had this year. While the indices have been pretty slow these past few weeks, names are moving incredibly. We've had 20 or 30 breakout alerts the past few weeks that have been winning trades. So pretty unbelievable time. Without getting too much into it with the talking, let's just jump into the charts here. So I'm going to share the screen. So we see quickly, I got the S&P 500 up here. We see this 455 area is beginning to act as resistance. But I mean, look at this run we've been on. And the fact that we're just moving higher and then moving sideways slowly and higher, we're not even giving real pullback. What that's showing is they're not letting anybody in. It's a true breakaway market. Bears are very, very frustrated right now. They just keep getting blown up every time they try to average up higher. The people who are waiting for the pullback are getting left behind. So, it's a very frustrating market for some, but if you're involved, there are just names breaking out of bases in droves, the amount of stocks breaking out right now. So, here's the S&P. The most important chart to me right now is this IWM. These are the small caps. So, it was in some trouble a few weeks back. Testing these lows, launched off these lows, which began our rally, pulled in a bunch, and then continued to launch higher since then. So now it's just beautifully flagging, letting this 8-day simple moving average catch up. This is just the healthiest digestion we could have seen possible. This is the best sign we could have seen possible to me, this sideways action over the past week or so in the IWM. So, and then rates, we saw them come in today again. So they're retesting this, 4.35-ish level. This was, the breakout high. Now it's coming down to retest. So, expect them to chop around this area for a little bit. I wouldn't expect them to continue to flush. But, hey, as long as names are continuing to move well, for example, all right, so the QQQ today had some selling volume. And it's concerning that it finally had the 8-day simple moving average catch up, and it closed right on that number, right on it. So that is concerning. But the fact we're seeing a strong IWM, small caps, that's rotation right there, that's good to see. However, we see this 8-day break. There's a lot of daylight here in the Qs. That could to lead to that first pullback. See if this gap gets filled right here, this breakaway gap, or even if it gets tested. We haven't even tested the gap. So definitely a lot to look out for over there. I'll pass it over to you, Ben, while I get my individual charts ready. But if you've got any takes, please let us know.
So yeah, you touched on a bunch already. I'll touch upon a couple quick sectors. Again, energy took no part in this market rally that we saw the past few weeks, but the last week or so, it has started to kind of base out here. Again, they were getting smoked when the market was kind of rallying here, but we do see this little base forming in energy, so keeping an eye there. Again, across the board, tech is obviously leading. S&P, Dow 30, kind of in second, third place. Small and mid caps, again, earlier this month when we were in that correction, both of those, those markets were hovering near macro support, and that was kind of like a doom and gloom area. Like if it broke that major base here at these lows, it was looking, pretty bad for the small caps and mid caps as well. They held up phenomenally, and they're still holding this base, so it's a great sign to see. All the sectors pretty much doing the same thing, just working their way back towards those July highs. And the weaker sectors that the last few weeks, consumer staples, the REITs, utilities, healthcare, and even the biotechs, those were the biggest losers sector-wise, and even those have all started to kind of bounce back and start to set back up. Again, clearly nowhere nearly as strong as the financials and the tech names and sectors like those, consumer discretionaries, but they're still kind of setting up. Again, all of them are, everyone is kind of moving in the same direction where they're trying to push higher across the board, which seems like we're going to have a pretty decent end of the year. But again, we do want to just be aware of, like you mentioned, we had this crazy run. We are retesting, and for the Qs did push through this prior high from the summertime, but often these retests do get met with resistance. Again, there's still some way to go for that all-time high retest, which is like 410 in the Qs. But any little pullback or consolidation should be expected, and not like the end of the world if it's to occur given the run that we've had. So just some really good strong action. So that's my little take. So we'll pass it back to you, Sheikh. You want to go over top ideas, any good and bad trades?
Yeah, I mean, I'll go over a few trades recently that have just been, it's been few. What I would say for this, something important that you learn it throughout years of trading. It's like every strategy has a season. Like we love breakouts and things like that. Breakouts only work 3 months out of the year, roughly. On an average, market will have that feisty run 3, maybe 3, 4 months. Some years will have 2 months, 1 month for 6 months, long, whatever it is. What we've seen in this market, we became a breakout market the last couple weeks. It became time to buy, all these previous winners of 2020, 2021, the Shopify's, DraftKings, the fun names in the market. What the tell was on these names is that they all began breaking out in droves together. We've seen, one-hit wonders over the past few months where they break out and then give it back and things like that. The thing that's different about right now is we're seeing so many names break out of bases. And I'll go over a few charts I've recently traded. Let me share my screen. So right now it's just time to look for breakouts. I bought this KNF last week. Just bought through the highs, gave it 50 cents. Today I'm selling for $3, 6-1 there. This Rover, for example, not the cleanest trade or best winner by any means, but we bought up here this $8. Just gave it down to 7.80. These lows 20 cents, kicking some for 40, 60 cents up here. Another 2-3-1 winner there. This MDB, this one gave us a great trade. This one I trimmed a bunch today. It's finally looking to take a rest. The snow, this one was great to us. For example, I was talking about this PLTR earlier. You can go through name upon names and just look at these great runs they've had, just breaking these bases. Shopify is still running. This broke this huge base. Look at DraftKings. DraftKings on earnings, they broke this little base here and it's just continuing to run. So, times like this Affirm we had an alert for last week. Right here on this little inside day. See with the 8-day simple moving average catching up. That buying the 8-day catch up has been the most profitable thing to do the last couple of months. The last month. You see that here, rages into strength. Look at this Roku. We were talking before it broke out here. We had a little meeting in the live trading. We're like, man, the 8 days catching up to this Roku. We should look at it. And we're like, no, maybe it's a little too overbought, too risky of a name. Like, there's better things out there. Look what it did. It went from 80 to 103 in 2 weeks. Just insane. So this is the time to take advantage of it. As you said, we did already have the run. It could be slowing down a bit, but I'm still seeing things breaking out. Today I got into a few things. I'll get into them. This FTDR, just so tight down here. I bought, what is this? This 34.30. I bought above those highs against 30 cents risk. This Frog was trade of the week. This finally triggered. Gave some back at the end of the day. Still looks good through that 27. Just giving it to this low consolidation here. But this one, if this could get going, nice little short float, 30-31 on the profit taking. This Coco broke today. Now I was surprised to see this one give it back because let me go with the volume. Look at the volume this thing did today. It's pretty crazy. So it actually came in and stopped me out at the end of the day. I had just a trailing stop in. It dipped below the entry. I did get some good kicks off. I'll show you how I traded it. So that 30 was the trigger. Here's a 15-minute chart. This is the daily trigger. You see it broke up through the highs. I bought some to the previous day highs, added through that 30, 29, 75 trigger, whatever. Came out, made a nice push, came back, retested it. I saw the volume still there, so I added. And then I kicked some into strength, and then it got very weak towards the end of the day. And I kicked most of it, and then you see here, I just had a trailing stop below my entry. Normally, I would give this back the full way, but I've been adding so many positions that I don't need to hold losers overnight right now. What else was there? This CRS was the huge winner today. Look at this one. Look at this volume. Bought this one through, what is it, 69. I was actually late, like 60 cents, bought 69.60. Just gave it to these low 68. ran to 74, up 7% a day. This is not a tech name, mineral name. So lots of great action out there. Some things I'm watching from here. I'm gonna continue to watch this cocoa. That volume was huge. I kind of wish I held some just because the volume, but I'll watch it closer tomorrow. This SMCI, I got into a little bit of this today. This one gave us such a fit last week, but it's still setting up. We like this little daily flag. So now I bought a little bit today just against the bottom of this flag because you have to give this name room. It's so tricky. But if this one wants to break through these highs, 303, 306, that one looks like it's 360 in the coming days. Tesla, it's got this huge downtrend channel. It's not the neatest, a little sloppy, but we see it coiling near the top of this top of the range here. And they have a Cybertruck event Thursday. We know how much this name loves to break out on catalysts. So, I bought a little feeler today. I'll add up through 238-ish if we get it, just against this 230 area. Look to catch this breakout through this area. Maybe you get 250, 260, 270, 280 soon, if this market wants to continue to act well. This Airbnb is looking better and better. I saw this one. Haven't been talking about this one today. Nice little flag forming there. What else we got? This RPD trade of the week a few weeks back. Now it's doing exactly what we want it to do. It's got this huge resistance level, and now we see it just underneath the resistance level, coiling so tightly, powering up, so it can give us a really strong break of that level. So watch that one, 53, 53.50 area. Kind of a soft level, but huge upside there available. And I'm keeping my eye on this lemonade too. This was trade of the week a few weeks back, and I wasn't able to find a good entry on it, but it looks really good. 34% short float or something on this thing. So my thinking is that the second it breaks its 1823 highs, if you're short and your next stop location would be up here at 25 or so. So I can see shorts getting stopped out. This causing the big run, and we'll take it from there. But lots out there, lots out there. Definitely, I want to be busy right now to the end of the year. I hope this market remains. As long as we're seeing these names break out in droves, I'm going to be involved. I'm not watching tick by tick of the indices, because I'm continuing to see names move well. Even though we saw the NASDAQ weaken up at the end of the day, those small caps stayed strong. That was very informational for me. So that's just what I got. Mouthful as usual. Anything you want to add?
I'll go over a couple.
Oh, please.
Couple trades. So worst one, we were talking about this before we got on the call. For the challenge that we've done, it's crazy that how quickly the year goes by. Kind of nearing the end of this 5K challenge. Again, for right now, it seems like it's just kind of you and me in it.
By the way,
what's that?
I think I saw Chip in there. Chip might be there.
Yeah. But my plan from day one was very simple: was to pick one name, invest in that name in total until the end of the challenge, and that was my idea. The idea was Snapchat, and like an idiot, I had, and that's because, and again, it's like you can have the conviction for so long, and then you lose it. So going into prior earnings, I was up $500 or $600. I gave it all the way back. Continue to add, and I got this great bounce off lows. From 8 to 11 is a huge percentage bounce. And I was like, all right, this thing's went from 9 to 11. Let me take some profits in resistance, which at the time, this is resistance. Let me be cute and sell it at 11. And if it pulls back into under 10, I'll just reload and I'll buy it back. And of course, every time you think that, it does the opposite. So I sell it like an idiot. And it's another, again, granted, it's still one of my bigger positions is outside of that account. So I'm happy that it's going up every day. But challenge wise, I'm like, God damn it, come back in. So I had to move on to, I'm fully in like cart now for this move through 26. If I stuck with the snap, the challenge would have been over. But that's again, can't do anything about that. Only thing lately, I think, on a separate note, talking about like rebalancing, is I took some profits in this Uber. Shouts out to Abby, who sold a bunch more today. I took some profits in this Uber around this. What was it? 50. It was like in this 51 area. Nice little profit. And Uber has had a phenomenal year. been buying this name every day for quite some time now. And really the goal on my end was to take profits at this name at the retest, the IPO highs, which was more in the 60s. But given the run this name had, up until this point, and then looking at another name that I am a big fan of long-term, which is Etsy, I saw a better kind of risk reward opportunity taking the profits from Uber, taking the gain again, wanting to hold it till that retest, but taking the run up it had this year off lows and being able to buy Etsy near its relative lows. Again, early beginning of this year, Etsy was $150 stock, got absolutely destroyed this year. But after earnings, started to gap up a little bit, started to flag out. So I was able to pick some of this Etsy up around that similar time. I believe my initial buy was like 64, 65. I added some in this gap up. So, now it's like this same cost basis from here, moving back to 100 or even to 150, in my opinion, is a better risk reward than the current run from Uber, where it's at percentage wise back to the highs of 66. So I took the proceed, the investment in Uber and the gains, prematurely from where the initial target was, which was the 64, but from 50 to 60 versus in a name like Etsy, where the idea is buying it in the 60s and holding it till the 100, 120s, just a much better, much bigger potential reward picking up when Etsy is the most hated it's been stock wise in quite some time. So that was just more of a rebalance thing. We'll see how this pans out, how this rebalance happens over the next few months into the new year. But that was more just kind of a longer term adjustment that I made with two positions. So fully out Uber, kind of doubling down more on Etsy, and we'll see how that kind of pans out. So that's really it from a trading wise. Again, I'm still in this. Sorry, where is it? Okay, so again, still in this cart. Picked up some on, I think it was on Friday after Thanksgiving, and then looking after this 26. Picked up some. It was like 25 quarter, so that inside day high. Stop versus 24.50, and then I'll look to add through 26. And also this tap, this base break through 60. Again, not really the biggest fireworks out of the name today. Not surprising, the name has been pretty beaten down, but just saw this very defined base break through 60, very tight risk, 50 cents risk here. So added some more today versus that, versus the low day, it's 59.5. So, very tight risk here. So there's just two more swing trades I'm sitting in, and then keeping a very close eye on this AZZ through this 50 in time versus 48. It's been sitting up pretty nicely, and earnings aren't until the new year. So that's kind of the big focus for the next week or two if this AZZ is going to break out. So that's really it on my end.
Nice.
Anything else you want to touch upon?
No, into the push. Let's keep going, baby. As long as this market's good, we're gonna be trading it.
All right. That's it.
Christmas coming. All right. See you next week.